Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up for one wild trading day, and it was wild. On this Wednesday, the first day of May. Can you believe it? The first day of May, 2024. I'm glad I'm still here. So, I know you look at the gray hair and you wonder, well, I'm in great shape, so I'll be here a long time. Interesting day. You cracked down pretty hard the energies. I mean, they came down hard. Antony Blinken, our Secretary of State, has left Israel. He was hoping that Hamas would have answered while he was there. The Israel proposal that was made for a truce, they did not. Maybe tomorrow they'll get an answer, but I think Hamas is trying to hold out that Israel permanently pull out, and that means there'll be no deal if that's what they want. I can't imagine that Netanyahu will do that after all that he's going through. He'll lose his government. So that part isn't going to happen if that's the case. Could I be wrong? Very wrong, not a politician. As we look at the gold market, certainly acting better than it's been, along with all the metals. They're up a bit, and that says a lot, okay? And they're probably up in part the initial reaction because what came out of the Fed today was important. The Federal Reserve Chair answered a lot of questions. Number one, he did not take off the idea that if the Fed had to raise rates again, they would. But he doesn't foresee that as being the case. They are disappointed as members that the inflation rate hasn't fallen further. They are higher for longer. There's no set time as to when they have to cut rates or if they will cut rates as long as you keep the inflation this way in a strong labor market. They see signs of weakening, but it hasn't grabbed hold. They would get concerned about the labor market if it rallied up, say, to 4.2%. Something in that area is my guess as to where they would be. They claim that they're not political. They did reduce the amount of the balance sheet runoff, and they took it down rather sizably. And that's what they did. Now, the big bet in the market, huge bet. I think it was the largest option bets that in recent times made on the S&P that it would go up or down 1%. And going in, it looked like it was a loser. And it was until late in the day when the conference ended and the market soared in stock indices. Now, believe me, as much as it soared, that's how fast it lost the gains. But it got to that 1%. And it just disappeared. Now, as an options guy, if you're betting on that and it hits 1%, do you think you made any money? I don't think so. It depends how efficient the market was, okay? You got to be placing those bets much earlier because as the crowds come in to place these big bets, the premiums move with you. So the question is, did anyone really make any money? Certainly the guys that thought it was going to go down 1% lost all those bets. That game ended. But I'm not even sure the winners won. There's a reason I don't like options, and you'll tell me I just don't understand them. But owning a brokerage firm for year upon year upon year, I can tell you the vast amount of option traders I've witnessed. They'll hit a home run every now and then, but most of the time it's losing trades. Whereas the trend traders in the futures, our experience was they had done better, but that doesn't mean that the average trader wins. The average guy doesn't look at charts. He doesn't look at what he's doing. He's got a hunch. He plays the market off his hunches. I've learned that after owning firms for, 5 decades. All right. When you and I look at the S&P, I've told you I think a battleground is at the 18-week average of closes. At least on something I'm right. That is where the market is fighting its battle. Very, very clearly. Couldn't be more picture perfect. If you look at today, and I'm going to come back just so you can see what this market did, it got up to 51.26. So yesterday the market closed at 51.48. It dropped down, rallied all the way back, and then came all the way back down. I was watching the market in amazement as this was happening. And as you can see, the market finished off lower by almost 0.4 percentage point. Let's get to the next day, to right now. And this is where you're hanging. But But I'm telling you, I was watching those bets, and boy, were they wild. Before I get too far, why don't we take a look at what we've got here in free offers, and then I'm going to get to the news for you. Remember, on our free offerings, all you do is go to iraepstein.com, free offers, and you can. One of the things I'd choose if I were you are certainly going to be our price counts. But then you've got our trading strategies. You've got free access to our charting software if you've not tried that. We have 2 versions for you that you can work with. Our Pivot Point video series is free. Futures Trading Kit with so much in it, you'll get buried with all the courses and all that we link you to. I think you'll love what that part does. QT software. So we've got, as I said, 2 different versions for you to look at, and they do very different things. You might really enjoy how they work out, and there's more below that. All you do is go to iraepstein.com, and when you're there, look on the top left, you'll see free offers, or move your cursor to the top here if you're on a PC. You'll see an icon, give it a click, fill it out, and get things to you right away. All righty. So why don't we take a look at the news? And this isn't the one I wanted. Let me get to it right here. There we are. You're going to get the Challenger Gray with their monthly estimate of planned U.S. employer. And this is corporate jobs that'll come off, and that'll be out at 6:30 in the morning. Jobless claims. We keep getting this 212 number right in that area. It's funny, but that's what they're looking for. That is not a weak number or a strong number. That is where we're at, and it's actually historically fairly low. The March trade balance data comes out at 7:30. The first quarter preliminary non-farm productivity data comes out at 7:30, so it's a busy morning. Factory order data comes out, and that's going to come out at 9 o'clock. The energy analyst for the EIA natural gas storage, that's going to come out at 9:30. And remember, on Friday, you're going to have the U.S. jobs report data at 7:30 in the morning, and we'll see, is the Fed going to get a break, or is the jobs report going to stay strong? I'm voting that it'll stay relatively strong, and that's because I'm not seeing anything else weaken for the month that we just went through, where it looks to me weak. In fact, the past 2 months haven't looked weak, so we'll see where that all goes. All right, so let's go back, if we could, to our charts and take it over from there. So as I said, you're in a downtrend. The market fights a battle right here at the 18-day average, even today. That's all you went to. And then you came right back for the support at the 100-day. And as I've said over the past 3-4 days, that's your battleground, these 2 numbers. If the market fell apart, I don't see anything here to make it really fall apart, but if it fell apart, potential of 48.07, but more likely the lower Bollinger Band, if this gives ground, into the 49.72 area. So the market is defining itself. You're no longer in oversold territory. Trend down, bias down, and you're not oversold. The bears still have control of the market. You need to get over 51, 54 and a quarter to say that you've got an end to this break. I don't see that right now. It is still the sell may go away mentality at work. As we look at the NASDAQ, you also rallied back up today. You wouldn't believe it, but remember we talked yesterday. I said, I see the resistance, the 100-day average to the 18. Let me just walk you back here so you can see what this market did. Here you go. It's exactly what the market did. The trend is down. The bias is down in the marketplace. As we take a look at where we're at, bears are still in control, and I still think they'll be selling those numbers. Stops over these highs. Overall objective could be that 17,077 level. In the mini Dow Jones Industrials, trend is down, and again, right back to the 18-day average, fighting the market, trend down, bias down. And in the Russell, right back to the 18-day average. So we've spent a week, basically 5 days, going up, challenging those numbers, unable to go anywhere as you do it. Admittedly, we haven't fallen apart yet. There is no trend in the Russell. You got a higher high, lower low. I don't see anything that's there. So just keep your eyes on what they might want to do. Then we come up to the bonds and notes. Well, I have been looking since you lost the bearish embedded reading that you could get back to the 18-day average to fight a battle. Classic, right there. I was looking when you lost the bearish embedded reading, you'd get up to the 18-day average. You did. I had my client short in this market, and I got out too soon on this day. There was a few more points to be picked up, and that's about it. I knew I didn't want to go through the report today. I mean, I've learned you stay away from some of these crazy things in futures, and you walk back. I treat stocks and the stock positions and the ETFs very different than I do futures because of the leverage in futures. 90% leverage makes wild things happen. In the dollar index, so I'm being tested. Is my idea that the dollar is going to be stronger than the euro going to work here? You had an outside day down. So you have a higher high, lower low, and momentum is pointing down. Nobody has control yet, but if the market closes now under the 18-day average, the bias turns down. If you take out today's high in the dollar index, you create what's called a bear trap, and I think you'd go up to the upper Bollinger Band. But it was a disappointing day today for the dollar bulls. And in the euro, the market is trying to come up. The question is, can it? I see resistance right here at the 18-day average. I think if you don't take out today's high and you can get back through the low, you open the door up to get to the lower Bollinger Band. It's at a funny spot right here. I am not comfortable with ideas for you, other than I still overall had liked the bear position, but I wouldn't like it if you get over the highs of today. In the British pound, look for a battle between the 200-day average and the 18. You're void of a trend. You have a higher high, a lower low, a higher high, and you're very overbought. Rough market. Bitcoin. We had talked about the halving, and I explained to you as best as I could when it was happening, don't join the crowd off that word, because what normally happens is this fake move. The newcomers buy it. Oh, there's going to be less Bitcoins on the market. And that does happen. But it takes about 4 months. So everybody rushes in. Anything they can get registered, they do. And you get more supply that comes onto you right away. And from there, the action starts developing. Right now, it's in a classic downtrend. It's oversold, though. I'm looking for the support now, right in this area, the lower Bollinger Band to the 100-day average. I think the pros are already covering short positions. Brent versus WTI. The first move that we're getting now tonight is back under the 18-day average. So this whole market, as we're breaking down, and you'll see this, is carrying with it the Brent at a big number. You can see it's very oversold. If it keeps breaking down, then support comes in at 81.83 to 81.67. This market is not trending. Not in my opinion. You've got a higher high and lower low. Now, in all fairness, the market did give the swing line with buys here, but because you're under the 18-day average, I look for it to peak at that number. And that's pretty much what it did. It didn't offer a sell signal. It had plenty of reasons to come out of shorts earlier, but that's about it. Identical thing as I'm saying it in the WTI. Gasoline, you've heard me say, catch me once, I don't want to be caught twice. I didn't get trapped into this where people were saying buy. I was getting people writing me, should we be buying? I said no. And now you've got your washout. Now, I'd love to see the market get down here and just take all the bulls out of the market. Now, don't get me wrong. For every long, there's a short. But I mean, you'd see the contraction. And I think you've caught a group of people right here. Are you trending? You are not. You have a higher high and lower low. And in that gas, you know my thoughts. I don't know what to do with this sideways action. The trend is down, the bias is down, but you keep holding that Bollinger Band and refusing to add layers to it, and then the market gets the short covering and drives it right back up. Got better things to do with myself than get caught up in a market like that. So I hope you take advantage of our free offers. Remember, you can click up here at any time with your icon to do that. Go to iraepstein.com under the word free offers, top left of our website. You'll see it there, and give them a try. You have a great evening.